Market Watch and taking the lead. Today's topic, the networker. Cisco releases its earnings after the bell today. The company has beat or met analyst expectations 19 quarters in a row. Can they do it again? Joining us for a look at the networkers is Tom Lauria, Director of Telecom Equipment Research with ING Bearings, and he joins us live from our Midtown Manhattan studio. Welcome, Mr. Lauria.
Hi, Liz.
We'll get to the sector in a minute, but do you think Cisco's going to make or beat its numbers?
Yes, absolutely. We're expecting the company to post revenues of about $7 billion. That's high single-digit sequential growth, and to come in at or above consensus estimates, which right now are at about 19 cents per share.
There's a lot of negative psychology in the market nonetheless, particularly about the networkers, some of the chip makers, etc. How do you feel about this sector in general?
I think I agree with you completely. The negative psychology has persisted for quite some time. I think for the most part, we're expecting that sentiment to continue, certainly for the next 3 to 6 months. I think the economy is certainly a wild card right now. And I think that unless we see an improving economy and increases in capital spending plans by the carriers, that sentiment will not change. And I think that 2001 will be a fairly difficult year, and 2002 will really be more likely to be a breakaway year for growth.
Let's go to the micro picture. Is there one area of weakness that we're seeing, whether it's the routers or the circuit switching, anything that investors can look at in particular and be able to make their decisions? Certainly
the traditional segments of the market, circuit switching, in decline at this point with some telecom equipment companies, and I think that we'll see that decline with other telecom companies like Nortel later on this year. They haven't seen it, but we have seen some reductions from Lucent. We're expecting a growth rate for this year in the negative 25% overall. Now, that's a fairly significant decline, and it's a very significant portion of the overall market for telecom equipment. You mentioned Nortel, and I bring that up because Nortel today took some, at least it was announced today, it took some assets off JDS Uniphase's hands. Yes. So do you think that powers up Nortel? I think it's a plus. I think the company did about $2.4 billion in components revenues last year, and that's largely an internal source for Nortel, so only about 20% is external. But this will definitely help them in the active components. What they acquired was the components that are required for sourcing of lasers, 980 nanometer pump lasers. So it's a net plus for Nortel, and certainly it was a requirement for the JDS Uniphase merger with SDL. I know you think the group is volatile, and because of that you don't have picks per se, but you do say that Ciena and Juniper are two decent companies. Pick one you like the best here. I think for the most part, Juniper is the best positioned player in the segment of the IP routing market, 10 gigabit or very high-speed optical transmission, and they've really distanced themselves from the pack and have even out-executed Cisco on that particular segment of the market. They basically created a software system called Junos, which is a bit better than the Cisco iOS version, and it's the only one that's out there right now in any type of volume that can create optical interfaces for IP routers. So that company really is taking the market by storm. It's a market that was only about $2 billion in 2000, and we're expecting that to grow to in excess of $15 billion in only the next 3 years. So certainly a lot of room there, but again, the same opportunity that was created for Juniper to do so well is also the same opportunity that presents itself to other telecom equipment companies that are certainly developing the next generation of products as well. Tom, I know it's a busy day. We appreciate you taking the time to be with us. Thanks so much. Tom Lauria, Director of Telecom Equipment Research with ING Bearings.
Coming up in the next half hour,